everyone, and welcome to this week's Flash Friday Finance Update. I am here with the lovely Penny Morton, and we are discussing a few things about loans, which might be of interest to people. And the first one, Penny, was we saw this week a change in the way major lender is treating these really low 4-year rates that we've seen that have been out. And what happened? Tell us.
Well, we have done a lot of fixed rates recently because they're cheap. They're really cheap. We haven't seen rates cheap for such a long time. But what we have seen this week is one of the major banks actually increased their 4-year fixed rate by 0.2%. So perhaps it's the end of the really cheap long-term fixed rates.
Yeah, you realise, you get in the mind's eye that you're thinking, well, they must be ready, thinking that the 4 years rates are going to be different than they are now. So obviously a lot more positive. And whereas before the 4-year rates, you thought, well, rates are not going anywhere forever if their fixed rates are this low. And the thing that people maybe aren't realising is variable rates have been at least 0.5% higher. Standard variable rates for owner occupiers are 0.5% higher at least than these fixed rates that are so low. So maybe it's time, if you were going to cash in on them, lock it in. And it was interesting, they reduced their 2-year rate to be a bit more competitive, but increased their 4-year rate. And they're probably the market leaders in knowing what's going on in terms of where movements will be. They are very responsive to what's happening in their market. So I've got to take notice of that. I agree. So what can people do about it? If they fancied a fixed rate, what's their first course?
Call us, give us a call. We can have a look at what's out there at the moment, because honestly, it does change daily, the different options. And I think that we're going to see a lot more changes in the longer term fixed rates in the coming days, weeks. So yeah, we can have a look at that for you.
We were also talking about, if you took the view that rates were going to change while your application's in progress or you're just about to submit, what should you do about it?
So most lenders will offer a rate lock option. It's where they charge you a fee to lock in that interest rate for the time of their application in progress, so that you're guaranteed that low rate at the time of settlement.
The problems with fixed rate locks is they're really expensive often for what they are. It's like $750 or 1% of the loan amount. So you've got to take a pretty serious view, because that's a couple of, that could be a year's interest change. And you might be better off with just the higher interest rate. So watch out for that, because that rate lock fees are a bit of a trap. There are some lenders now who will guarantee your rate on approval. So the minute your loan's approved, whatever they've told you the rate will be, that's your rate. And you think, well, thank goodness someone's being sensible. Yes, and we know who that is. But anyway, and the other thing, so if anyone has any questions on rate lock, please feel free to ring us and have a chat, because it's one of those things that comes up and you should know about it, when you're considering fixed rates. And the other thing I wanted to talk today about was servicing of loans. And people think, well, if I can just make the loan interest only, then it's less for me to pay. So the bank must consider that I'm much more able to borrow that amount of money. But tell us, what's the reality?
So even though monthly your repayment will be less if it's interest only compared to principal and interest, what the bank is looking at when they're looking at the overall servicing of the loan is they're actually servicing your loan over the principal and interest period. So hypothetically, if you had a 30-year loan term with a 3-year interest only period, what the bank is looking at is making sure that you can service that debt over a reduced 27-year loan term, not the full 30 years. So for servicing, it may actually be harder, even though in reality, your monthly repayment will be less.
Yes, so if people have asked some lenders and they've said, I wanted 5 years interest only on this investment, and they were refused the loan, they could have just removed that 5-year interest only period, reduced it to 1, and you might have got your loan approved. So don't necessarily take that as the cure, because it's certainly not. All right, well, no, we're here for you, Louise and Penny and the rest of the team. We've got Wah and Caitlin now also, and we'll introduce you to Caitlin soon, and all our back office team. And we appreciate if you want any assistance, That's what we're great at, educating. So thank you for watching. Have a great weekend.